Hello traders and welcome to the London Forex Broadsheet's weekend wrap of the markets. The euro fell by the most in 8 years against the dollar. Traders are pricing in less chance of a rate increase from the European Central Bank after ECB President Trichet expressed concerns yesterday regarding European growth prospects by saying they would be particularly weak through the third quarter. During Thursday's post-decision press conference, Mr. Trichet reiterated that the ECB currently has no bias, which traders took as a sign that the bank would remain on hold through the September meeting when the ECB will also present its new growth projections. The euro dropped by more than 300 pips on speculation the ECB will not raise rates anytime soon. The daily chart shows the pair has now moved well below all the daily simple moving averages and is testing the 1.5000 level. The pound reached its lowest level since November 2006 against the dollar in overnight trading. On Thursday, the UK's largest mortgage lender said house prices fell by 8.8% to £177,000 in the year to July. This was the biggest decline in 25 years as banks' limited credit and economic pessimism grew. As expected, the BOE maintained its 5% lending rate on Thursday. Traders will be able to assess the Bank of England's next move after the release of its inflation report on August 13th. The daily chart on the cable shows a descending triangle, and as is normally the case, the pair moved lower, breaking the support level. The cable remains below all of the daily simple moving averages, and next week could prove critical for the pound as the economic calendar is loaded with important releases. The Aussie was sold to the lowest level since February 7th in overnight trading as traders speculated that demand for Australia's commodities will wane as global growth slows. Today was the 9th day in a row of decline for the Aussie, a stretch that hasn't been seen since January of 1995. The RBA monetary policy statement will be released on August 10th. In a follow-up to yesterday's charts, today's daily chart shows the 38.2 level on the Fibonacci retracement was unable to hold as support and the pair is now heading towards the 50% level. The loonie continued to rise Friday after the break of trendline resistance on July 25th, reaching its highest level since August 2007 after oil and other commodity prices continued to decline. This was the biggest weekly loss for the loonie since 1971. Statistics Canada said on Friday that 55,000 Canadian jobs were lost, and this was the biggest fall since February of 1991. The unemployment rate edged down to 6.1% as many people, particularly youth, left the labor force. Part-time employment has grown by 3.5%, much faster than the 0.9% growth in full-time jobs, a further sign of weakness in Canadian employment. The report is likely to place greater pressure on the Bank of Canada to decrease borrowing costs at its next meeting on September 3rd. The loonie continues to move higher. Today's movement was influenced by horrid Canadian employment figures, which moved the pair higher. The daily chart shows the pair continuing to trade in an upward channel. Swissy rose as equity markets advanced, reaching its highest level since February 26th. On Friday, the State Secretariat for Economic Affairs said the unemployment rate held steady near a 6-year low at 2.3% as restaurants and hotels hired workers for the summer. The Swissy moved higher throughout the day as the dollar strengthened and the 200-day simple moving average was unable to hold as resistance, and the pair is now trading well above all of the daily simple moving averages. The yen fell against the dollar as equity markets completed their second straight weekly gain. Overall exports fell in June for the first time in 55 months. Factory output has fallen for 2 straight quarters, and Japan's jobless rate has risen. The daily chart for the yen shows an ascending triangle that had been in place, and as would be expected, the pair broke above the resistance line and is now on the 110 level. On the upcoming economic calendar for Sunday, we have the RBA monetary policy at 21:30. On Monday, we have the PPI input from Great Britain and Canadian housing starts. In Asian equities, shares fell to the lowest point in almost 2 years as the Nikkei slid 42 points or 0.33% to close at 13,082, and the Australian S&P ASX declined 31 points or 0.63% to 4951. In European stocks, the German DAX rose 18 points or 0.21% to close at 6561, while the UK's FTSE gained 11 points or 0.21% to close at 5489, and the Dow Jones Stock 600 was up 2 points or 0.83% to 289. On Wall Street, at the close of floor trading on the New York Stock Exchange, the Dow was at 11,734 after gaining 303 points or 2.65%. The S&P closed at 1296, up 30 points or 2.39%, while the Nasdaq finished trading at 2414 with an increase of 58 points or 2.48%. Crude oil for September delivery fell $4.82 or 4% to settle at $115.20 a barrel. Gold futures for December delivery fell $13 or 1.5% to close at $8.64 an ounce. The precious metal has fallen for the sixth straight session, the longest slide since June 2006 as the euro collapsed under the dollar. Treasuries were slightly lower. The 2-year note yield rose 7.6 basis points to 2.493%. The benchmark 10-year note gained 1.7 basis points to yield 3.941%. Overall, sentiment has apparently turned heavily towards the dollar's favor, as the world seems to be turning towards the greenback and away from commodities. The Reuters-Jefferies CRB index fell to a 4-month low, as projections of slower economic growth led traders to speculate that demand for raw materials will wane. Prices for copper, platinum, and palladium declined as the dollar strengthened on Friday. This concludes the London Forex Broadsheet's weekend wrap of the markets. We appreciate you making us part of your trading day. And have a fantastic weekend.
All contents of the LFB are for informational purposes only and should not be used as a replacement for research by an individual investor, trader, or licensed investment professional. Neither the LFB nor any of its affiliates shall be liable for any errors, omissions, or for any actions taken in response to the information contained herein. We hereby make no representations or warranties regarding the accuracy of any information contained in this broadcast or on our site. Forex market trading involves special risks and may not be suitable for everyone. Each investor or trader should assess their financial situation and risk tolerance before proceeding. Copyright 2007, LFB Services, LLC. All rights reserved.